So I'm going to kind of stress or reiterate what we could see happening, that even if we move the chart right there, you'll have the prospect of the markets being in this sideways trend channel. But we had evidence of an actual signal here. Now, we were still in the whipsaw mode. We didn't know we were in a whipsaw mode until it started whipsawing pretty bad. But once we saw that, and we knew that they were basing down here, we had to at least acknowledge the fact that we had a strong buy signal and they were trying to push up here again. Maybe or maybe not time that it's going to break out. Well, looked like they tried to, but notice on this day, make this bigger, they still didn't break out. Traded back. The next day, they traded down here. But here's why knowing the little parameters that we look for is very important. Look where it closed as far as the T-line. So if you just take everything else into consideration, a bullish engulfing signal, bouncing off the 200, a gap up well above the T-line, a failure to break out, a pullback, but the pullback holding up. So at least now you should be getting the idea or the inclination that maybe there's bullish sentiment coming in because they haven't been able to back the market off. And what's our simple rule? If you're above the T-line, at least the prospects are much stronger that you're in an uptrend. We have one simple analysis. The uptrend might be in progress because we're above the T-line. Then the fact that they gapped it up here and they're still trading it up just gives us a good view that we're in a big fry pan bottom and investor sentiment is starting to build back up again. So the reason I'm pointing this out is that we knew that it was basing down here. We knew stochastics were trying to come up. That this is the whole point of analyzing what the signals are telling us and what our T-line indicators telling us. That at this point we could start at least seeing it might be a rounding bottom setting up. So even if you're not a sophisticated technical analyst, or especially if you're not a sophisticated technical analyst, with candlestick charts, at least we can see what happened. And this was a very good clarity that we're out of the indecisive trading range and we're above the 50-day moving average, which not only is decisive for us looking at candlestick charts, but you can expect everybody in the world who's watching to see whether the movement or where kind of knowing what normally happens in human nature helps us out quite a bit. When they break through a resistance level, what do they usually do? They come back and test it to see if it's going to act as support, which today in the NASDAQ, they pulled back. It was down 15 points, 16 points. But notice what they did. They actually hit the 50 and bounced back up a little. The 50, and it's going to act as support. And they start trading it positive from here. You want to start buying up or loading up the wagon. That's usually an indication they're not backing it off. Plus, this is why I look at 4 indexes. The Dow, the NASDAQ, the SPY in one or two of the indexes, and there might be soggy on the other two, it tells you there isn't any major change of the current trend of the market. Just some areas are backing and filling. So the fact that the transportation index was up as strong as it was today was a good indication that they're not coming out of this market. They're coming into parts of the market with great resiliency. So with that, I'm going to skip ahead. Once we saw the Dow starting to set up like this, specific stocks start showing bullish strength. That gave us, and I'm saying us, because years ago I would have sat here and said, oh, I don't know if the market's heading up or not. I don't know whether I should be buying. Well, at least now I can make a much more clear evaluation that the indexes are showing some strength based upon the candlestick charts. And now I've got a piercing signal bouncing off the 50, gapping up through the T line. There's a good possibility that this is doing a fry pan bottom. Now I say good possibility. Before I would have said, oh, I'm going to wait and see what it does. Oh, I'm going to see what it does. And I'm buying up here instead of buying down here. So this is why I'm trying to point this out is we've got a much what individual stocks are doing. So I was going to look at these down the road, but here's another thing that we're looking at. A doji gap up in NVIDIA. A doji gap up in NVIDIA. Off the 200, off the 50. What's that kind of telling us? That if they break this little downtrending channel, there's the strength that we're seeing in here is telling us we need to be starting to load up a little bit. So on that basis, this is why we can get into positions much earlier than most other investors. Is this a good time to enter the S&P? I wouldn't be afraid to, because what's our analysis of what is happening in the S&P right now? Well, it's had a month of choppy, indecisive trading. Then we stayed above the T line. I would suspect at least over the next few days, we're coming back up to. That's what everybody's decision is, not what everybody's speculation is. So I would go as far as saying got pretty much a kind of a trend channel and got some more upside. And if it breaks out through this level and heads for this, let's make this even smaller. Look what we had. We had to make it even smaller. Yep, I guess that's it. Let's see, I'm going to even do this. Let's go to a weekly chart. See what's happened here. Up move consolidation, up move consolidation. If they start breaking out up here, we might be in another leg up. So this is why I kind of, I've had the advantage through the years now of saying, let the market tell you what the market is doing versus what the talking heads are telling you the market is doing. Anyways, all right, let's start taking a look at some that we were going after. Cree, for example. You can see how this bottomed out. And this right here is kind of your bullish flutter kicker with a double flutter in there. Down day, doji, bullish confirmation, little mini scoop. Now you're above the T line. Where's your next likely targets? Up here. So we've got the advantage of not only being able to recognize when the market's starting to head up, but which one of the charts are telling us. This is our CLDR. It has been working out very nicely. Potential target up here at the 200. So I'm kind of trying to point these things out only because we're going after the charts that have signals and patterns and strength that put us in situations. ARDX. If you haven't bought this one yet, if it comes back up through the close of that day, you want a J hook, this is your signal. This is your best friend signal. This would tell us either we have a J hook or at least a 45 degree. And again, that's just from simple analysis of knowing what this signal right here illustrates and then what this pattern illustrates. So it's not like we're guessing at what might be working place at the right time. I love these type of charts. Whenever you have a trend and they do a belt hold, that means during this trend, when you had bulls and bears, bulls and bears, bulls and bears, then all of a sudden the bears knock it down and the bulls buy up all. Over here in box, started the uptrend, there's your belt hold, there's your trajectory, belt hold, there's your new trajectory. So again, this is not rocket science. This is just the graphics of human nature. CGC, another one that's and filling today, still has the prospect of filling this gap right about the 50. And did we do Weibo? No, we didn't do Weibo. Observe the obvious. Notice when they pulled this back, what happened when they got right here to the T line and the 50? Doji, 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 doji. And what do we know about that? They came back to the support level and were trading indecisively. We were getting ready for this because this made for a very high probability trade setup. That any strength over here telling us we supported the 50, where do you think the next target was going to be? Strategies. And that was kind of the alert we put out today on the CINA. Put out that you could be buying the September. I think they only have the monthly. September, $45. I think that was for about $1.45. But if it comes up here over the next 10 trading days, your $1.45 should go into the $8-9 area. But then if you really want to get funky, 33 cents. So all it has to do is come up to this area, and you're going to be making money with your calls, and then your 33 cents goes to $2. That's a good, very good rate of return. So that is what kind of enhances your ability to make big profits with simple option strategies, knowing exactly what to expect on a price move. Now, we did the same thing on Weibo, and I'm coming back to this because we had the option session this weekend, where we bought I can't remember, 43.50s. I think we paid $1. Hold on, figure this out. Expire the next Friday. Bought the 43.50s for $1.95. Well, today they closed at around 6:30. But the other thing that we added was that instead of for 75 cents, and today they were at $2, which is the maximum that you could get. Ooh, I'll take a look at Cena again here in a second. So for that trade that we paid 75 cents for now went to $2. Obviously, that's a very good rate of return and a very safe spread trade. But buying the calls and the spreads, well, if this worked just a little bit from right about here, if it went to 45.50 or above, that 75 cents went to $2. As a matter of fact, there was times today where you could get out above the maximum. They were trading at $2.10 and $2.15. But as you can see, 75 cents going to $2, our ultimate target up here. So we got the best of both worlds. We made a good profit on the short-term spread, and now we've got the calls still making money that they could go all the way up to this level. All right, let's go back to Cena. No, that's not a belt hold. That's the fry pan bottom breakout. Remember what a belt hold signal looks like. Belt hold is when you see the trade up into the trading range. You can ask right now, Neil. This is the numbers there. So on Cena, okay, so again, this is why I tell people if you're going to learn, both of them had earnings, yes. So what was the reaction to those earnings? Well, belt holds. We know what the results of belt holds should be. And that's kind of explaining why candlestick signals are relevant, because somebody thought the earnings apparently on Box weren't any good, but by the end of the day, they figured out things are going to get better. And that goes to the analysis. How many times have you seen somebody come out with great earnings and the stock just falls right out of bed? Or vice versa. Stock comes out with bad earnings and the stock starts skyrocketing. Well, remember, you're looking at chart patterns that tell you exactly what the investor sentiment is. So this is telling you that somebody didn't like it, but then they thought better, but that told you exactly what the investor sentiment was. They were still liking it. When entering, do you use even or limit? Even or limit? I don't know what it's even. No, what I do is, I guess this is pertaining to either stock or the options, Neil. If I was buying Cena tomorrow, let me see if I can pull it up. This is the September 20th. So when you go down through the options, you can see that this only trades monthly options, either September or October. So if I was looking at these calls tomorrow and I see they're bidding 143, asking 158, that's 15 cents. Maybe I put a bid in at 151, just slightly above the halfway point. I'll set it there. Now, if the stock starts, because I'm worried about 357 cents, I'm buying it on the basis that I think whether I pay it at 8. I want to be in it. And the reason I say that is a lot of people say, oh, shoot, I'm going to try to save 357 cents. I'm going to see if they'll bring it back, save 357 cents, and the stock moved 2 points without me, where I would have made 200 points or $2 versus that it takes a lot of trades to save 70 for the 45s. If it comes up here to about the $8 or $53 level, the 45s are going to now be worth $8 on those options. What will happen, Neil, is if I'm doing and I hope everybody doesn't mind us walking through this because a lot of people say, well, I don't know how to do a spread. Spreads are fairly simple. Click here, hit buy, and this may have gone out of the range, but I come up here and I hit vertical. All right, so it already did it for me. Buying the 45s, selling the 47.50s is going to cost me about $1.05. So that's when I hit send, and it will sit there. It takes them a few more minutes to do the spread than just buying the calls, but a lot of times within that execution. Now, if I want to go a little bit more spicy and do a 47.50 and sell the 50s, 50, what happens to that price? Well, if it goes above 50, the eventual price will be that the difference between the 47.50 and the 50. So that 30 cents goes to $2.50. Again, that's a way you can really leverage this movement in the that direction, and you got a better way to enhance some big profits. Now, what's the rationale of buying the calls at $1.50 and the spread at 30 cents? Well, if it does go up here, obviously you're going to make good money on the calls, and you're going to make very good money on. And what's the worst case scenario? Well, let's say we think it's still moving in the right direction, but it only moves up here. More than likely, you've made enough money on your calls that you've covered that 30 cents on the spread. And maybe if you have to close out the trade, you've got a little bit profit here, and the spread you may not get 30 cents back, but let's say you get 20 cents, a decent profit based upon it, analyzing what the pattern is. Okay, I got way off track here. I'm sorry about that. Cena. Forgot which one. Weibo. There's Weibo because of the same pattern setup that we're seeing in Cena. VIPS. You can see where VIPS has broken out. Right here. And what did it do to break out? There's your doji sandwich. What's that tell us? There's probably more upside. So if there's more upside after the breakout, what type of move can we expect? Wave 1, wave 3 up here somewhere. You have limit order. Yeah, you can add. I'm still going to kind of leave it there as a limit order. Because if you do it as a market order, Neil, they're going to hit you with as bad as they're going to just hit you where they hit the bid side on one and the ask side on the other, and it's not going to be a pretty picture. And I say this from experience because there was a spread I was putting on one time, and I could get it for $1.05, and I didn't get it. I moved it up to $1.40, which was still good because it was $1.40 to make the spread to eventually go to the $5 difference in the price. And I didn't get it. And I said, shoot, let's just do it at the market. When I did it at the market, they filled me at $4.30, which meant I was stuck in a bad trade, paying $4.30 on a spread that was eventually going to go to $5 if it worked. So I learned my lesson, and again, I learn lessons all the time, that if you're going to put in an order on a spread, just keep moving up your limit order. Don't go to a market order. Now, on the other hand, if I'm buying the calls outright and I can see what the bid-ask spread is, and I see it moving, yes, I'll just go ahead and do it as a market order. Here in the past week or so, Reggie, you can see the fry pan bottom setting up. Today we recommended Dana. You can see the fry pan bottom setting up. There's your next likely targets. Look at your cut. Your doji sandwich today, and there's kind of your little bullish flutter kicker signal. Telling you there's probably more up bullish flutter kicker off the T line. Probably enough strength to bring you up into the moving averages. did a J-hook pattern, still just staying above the T line, moving nicely. DY, another one we recommended when it did this big gap up, not gap up, but kind of you confirm these signals down here. All you do is stay long, more than likely heading for the 50-day moving average. Sonu, just stay long. J-hook pattern in progress. APTI, another one that's doing kind of a scoop pattern. We'll be buying this one on positive trading. Marna, observe the obvious. And I say observe the obvious because notice where it's obviously supporting. Right smack dab on the T-line. Now, why is that important? This is what I keep stressing. Nobody has the T-line on their chart. We do, because we know what the effectiveness of it is. But the fact that nobody has the T-line on their charts, right to that level, that's a pretty good indication that the T-line is kind of a natural support and resistance level of human nature. So POD is another one that when it broke out of our little kind of bobble breakout, how long do you hold on to this one? Until you see a sell signal and a close below the T-line. Now, you got to be careful because we've had a doji and then a hanging man. If they take profits, that's what these signals are telling us. If it opens positive and trades positive, it's telling us it's staying up above the T-line as well as the free T-line. You continue to hold. So this is why this is why the T-line and the 3 T-line is very important. If they're staying above the 3 T-line, obviously that means they're above the T-line. If they're staying above the 3 T-line, that tells you there's that much more bullish confirmation to the upside. Which also was the same scenario of Roku. Start taking profits. They were in an uptrend where do most people buy? They buy exuberantly at the top. That's what that little gap up tells you. We started taking profits right in here on that doji day. Now, I also had people asking, well, you got rid of the calls right in here because it was the day before expiration, but it continued up. Do you roll over into new calls? And the safer thing to do is, you roll over into a call spread, so you have less money exposed, and it doesn't have to move up as much to make the same percentage return. So it kind of offsets your risk a little bit. So we're looking for things that have possible breakouts. We can see what's happening in Tesla. If it opens positive tomorrow, what type of pattern do we have? There's our bobble breakout. NVIDIA, we're still holding this one. Still at the breakout stage, looking for a 45-degree off of here. Western Digital was another one that we recommended because look where it broke out. First of all, you had that little bullish harami bouncing off the 50, gap up through the T-line. Now you gapped up through the resistance level. Wave 1, wave 2, strong new buying going into wave 3. Jim, on which one? And some of the biggies like Apple, slow uptrend. Now, it might not trade Apple. It's not selling off. That basically tells us that the investor sentiment out there is not very negative that they're buying the biggies again. And Micron, again, that was one we were buying down here, and it is just broken out, looking for a 45 degree from here. Now, what's the magnitude of that 45 degree? I don't know why that's on here, but if this is wave 1, this is wave 3, got some more upside. I'm trying to see, was it Roku or this one? You've got a doji and a possible hanging man. Make this bigger. So if it opens lower tomorrow, what's that kind of telling us? Well, they're starting to run into resistance up here, or at least some selling. It's time to take some profits. Okay, and just as a hedge, I always have short positions on in the portfolio. So if you were looking at this as a blue ice failure, left-right combo right here at the 50, close below the T line, where do you think the next likely target's going to be? Down here at the 200. Well, we're getting close to the oversold area, and it traded below the 200, but when it hit the 200, what's our biggest mental factor is, boy, what if it keeps going down? We would look stupid that we just decided to sell here. So the way I get around that is I sell half the position. Now if it bounces back up and I get out up here, at least my average cost was in here. If it continues to go down, I say, I took some profits, made some good profits, and it's still making me money. At least I can sleep at night knowing that didn't do the wrong thing. EXPR, low price stock, but you can see the bubble breakout, fry pan bottom. Where do you think the next likely target's going to be? Up here. No, Bill, that's why, I tell people, if you, I tell people if you learn from your mistakes, there's your fry pan bottom breakout. This is still a viable trade. Where do you think it could possibly go to? Up here. Is it going to go straight up there? No, that's where you start watching to see if they do a J-hook pattern. But the probabilities now that you've broken out is that you've got the potential of a lot more upside. That's kind of the same scenario in Cena. Fry pan bottom breakout. TLRD. Fry pan bottom breakout. Where do you think the next likely target's going to be? Oops. Right up there. Now, why are the patterns more effective than just buying an uptrending stock? For two reasons. First of all, we can identify them. Secondly, we know the buildup of investor sentiment is being created involved because that's what's creating the pattern. So two things are going to happen. One, it provide a very big price move, and two, so it gives you a little bit more time to come out of the trade profitably. Hertz, same scenario. Look at your kind of your bottoming action. And notice what the bottoming action entailed. Bunch of dojis, lots of indecision. There's your morning star signal. There's your best friend. There's kind of your doji. Is usually going to move in the direction of how they open after a doji. A doji, smack dab on the resistance level. If they open up positive, what's the doji rule tell us? They're probably going to trade it positive. What's it tell us about the resistance level? It's not going to act as resistance. Why is it usually a big magnitude move? Well, as a candlestick investor, you can be buying right away because you know watching to see what it's going to be doing here at the 50. Oh, if it's breaking out, let's start piling in. So they're all still piling in up here when we know you could be buying right on the open. Kind of the same scenario here. There's your bobble breakout. This is SYNA. And there's your setup. Right smack dab on the 50. Fry pan bottom. Kind of a spinning top doji day. If it opens positive tomorrow, what do you want to be doing? You want to be buying immediately. That's where your fry pan bottom breakout is about ready to occur. What's everybody else watching? Well, they're probably not watching the fry pan bottom. It's getting ready. If it opens positive, we want to be buying immediately. Here's one that gives you good information. Notice how it broke this downtrend with a slow curve, big message. But they brought it all the way back down here. The next day they took it right back up. What's that tell you? There's lots of bullish pressure on this one. You can get ready to buy this one. Oops, I think we did this. Yes, that one's got a good prospect of going to the say the 950 area, $3.50 on a $6 stock. That's I can figure it out. It's a good percentage. CHL, I don't know why I have this one. Did I do that wrong? Apparently I did. Well. Now you've got a double doji sandwich. May not necessarily buy this, but at least you want to recognize when you have a breakout like this, meaning the breakout being a bullish signal up through the T line, that's the ones you want to start looking at. Those are the ones that are going to produce the biggest potential, right? Anytime you see this doji gap up, came out through the resistance level, you can pretty much anticipate there's going to be more upside. The best friend is your best friend. Oh, that's clever. Slow curve closed right here from the 50. If it opens positive, what's it telling you? Your fry pan bottom breakout is still in progress. Rig, one of the oil stocks, same scenario. Kind of a fry pan bottom that did get up through the 50 today. Where's your next potential target? The 200. Fry pan bottom on GP of pattern. Can you kind of see a little mini scoop here, but more of a fry pan bottom? I'd be watching this area. So anytime you see these gap ups, notice the gap up started this one. There's your bullish Chiramani, double bottom, gap up. This is the expected result. This is why we went after NVIDIA. Gap up, pull back, gap up again through this resistance level. Should be more upside. And Hans, look at the gap up. That's what creates these strong price moves. So the assumption has to be that even though we're getting up toward the overbought area, which doesn't mean much because once you get in the overbought area, that trend can still go for another month. But the fact that we gapped up through the 50 and we're still in a 45 degree, this gives us the probabilities much stronger in our favor that an uptrend is still in progress. Okay, I guess that's about all I've got for tonight. So I've got three. This is on the basis that the market opens up. Got Cena. Got Val, VAL, and TLRD, all fry pan bottoms. Is it the best practice to always close a position just prior to earnings report? Not necessarily, John. Brad, yes. When I tell Jim to do the double line, put in. All right, John. So here, that's yes. If you got stopped out, yep, that's what it was for. However, that's why you want to kind of keep R. So if you got stopped out, let's say they stopped you out right here on the open. Let me make this big up enough. I've gotten stopped out many, many times. But then I see it starting to come back up, I might go to my 10-minute chart and say, are they still buying? I'll buy back in. All right, so they popped me out at, I'm going to pick out a number, 568, and I got back in at 625. All right, but why did I get back? You get stopped out. Don't just sit there and say, oh, man, it stopped me out. I don't say, It's all right. They stopped out. Oops, now I can see what they're doing. Get back in. When you start seeing a huge price move, let's say, for example, tomorrow they opened and they started trading, just started skyrocketing way from the T line. Yes, that's when I see that, it's just visually seeing, well, it's way up here. Look how far away I am from where it normally trades to the T line. If I'm way up here, what do? I go to my 10-minute chart. And if the 10-minute chart starts showing a sell signal and coming back through the 10-minute T line, I take profits. Why would I take profits on a daily chart using the 10-minute chart? Because the daily charts tell me I'm way out of whack. I'm way too far away from the T line. A number of dojis is a stronger indicator than a single one? Yes. Just a very simple statement. If one doji means indecision, a series of dojis means greater indecision. So one of the best trades, and this isn't it, but if this was a flat, that tells me exactly what they're doing after that indecision. Dave, yeah, that's where you just kind of look at what the whole sector is doing. That's the semiconductors. Yeah, if that sector is starting to sell off, you don't analyze why it's selling off. All you have to do with candlestick charts is say, yeah, it's selling off. Let's close it out. Kenneth, no, we're not worried about the wash sale rule until the end of the year. So it's tax time. All we're worried about right now is profitability. So if you bought something at 10 and it went to 12.50, the wash sale is a tax ramification, not a trade ramification. SIG with a rounding bottom. For some reason I don't have SIG. SIG, yes, that's also a good looking chart. And why is it good? Get ready to buy this one. Why is this significant? Well, shoot, if it just moves up here, back up to this range. That's 5 points on a $15 stock. That's a 35% return, 33% return. All right, any more general questions on candlesticks? There's lots of good money being made in the options as well as the stocks, no matter which direction you're trading. For example, if you bought puts here, think of the magnitude of those returns down here. Okay, I guess with that, Jim, let's go ahead and do the double line. Oh, so John, if you see an earnings report, let's say right here is an earnings report day, and they close like this, you got to kind of keep in mind that the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. Well, if they're selling off, you can pretty much assume the people that know what's going on in that company or that possible earnings report are selling. Probably want to be out of that trade. On the other hand, if this is earnings report day and they're buying going into the close, more than likely the smart money is buying pretty strong, that somebody knows something good about the trade. Gold stocks, Barrick's Gold, you can see the kicker signal. You should have been out. AU, when it closes, this is why you use that very simple rule. If you see a candlestick sell signal and a close below the T line, close out the position. Is that the short? Yeah, that's the bear fund. You can look at your bullish doji sandwich today, which means gold stocks are going down, the short funds are going up. You can get ready to buy this one on positive trading, obviously watching to see what happens once it gets to the 50-day moving average. Seiko, if you're short, you stay short. You're in the oversold area and you have a doji. I'd have a safety stop just above today's high. And Starbucks is slowly rolling over, Bill, because you don't know whether, even if it supports right here, there's nothing on that chart that would make me want to stay in it. MasterCard, big bearish engulfing. This one I probably would have closed out today if I'd been long. Now, the other point is, notice where they are exuberantly buying. It was a gap up through this level, but it was a gap up in the overbought area. Next day they did a doji. Just put your safety stop just below the doji, because logic says if they come down through there, you've got a doji in the overbought condition. Where do you think the next target's going to be? Back down to the T-line. This one, stay long. You can see the fry pan bottom breakout. Stay long. It opened higher, closed lower, but notice what it used today. Still used the 3T line as a resistance or a support level. SLB below the T line, because logic says if they don't open this positive and go positive, that means they've failed up here. Come out of the trade. Let's see what else we got here. Over here. Yeah, Fannie Mae for some reason doesn't come up on this system. BPH, this one you can be buying. You can see how it's broken the downtrend. You can buy this one, use the T-line as your stop. TXMD, nice slow curve, fry pan bottom. You can be buying this one with the expectation you're heading for the clear. Tina, Diode, you can be buying this one also with it breaking the downtrend. Not one of your best looking charts, but it's got kind of this breaking that downward trend plus breaking through the 50 today. You can be buying this one. PCG, bullish engulfing, right smack dab off the support level. If you like this one, you can buy it on positive trading tomorrow. Silver, that's the Silver Trust. You can see the big evening star again. Notice what happened here. This is why I always tell people, if you see them gapping up in the overbought condition, have your safety stops somewhere. This is silver itself in the overbought condition. And look how far away you start moving away from the T-line. You had your safety stop right there, because if it came down through there, where do you think it was going? Right back to the T-line. Fuel cell. Whoops. Make this bigger. That's a nice little breakout. You can trade this one. I'm guessing this has got big volume. Nice little doji gap up. Stay long on this one. Nice fry pan bottom also. Probably heading to the 50. INFN, I'd have a safety stop just below today's low. It shouldn't come back through there because then you'd have a doji, evening star, hanging man, spinning top. It better open positive and trade positive to stay in it. Let's see, was somebody looking at fossil? Doji, yes. Another one where I'd have a safety stop at today's low, because if they can't get through the 200, which everybody else will be able to see, they'll start selling it off. Boeing's having a hard time. If this opens lower and you're long, close out the position. This one needs to stay above the T line, so it definitely has to open positive tomorrow. Netflix is having a hard time getting out of its own way. If it opens positive tomorrow, you can still be buying it. Whoops, I went ahead there, Brad. Yes, so the doji's up there on fossil. This one you can be buying. Just make sure the volume is good, and you probably want to see it get up through the 50. So if I was buying on positive trading tomorrow, I'd immediately want to see what it's doing right here. If it gets through the 50, then you can kind of figure it's going to the 200. You guys, whoops. Yeah. Stay long on this one. Nice fry pan bottom. State Street, another one that you can buy. I'd wait to see if they can get it up through the 50-day moving average. CenturyLink, but God, did somebody say this one's paying a good dividend, like an 8% dividend yield? If you're buying it based on the dividend yield, pretty much because it's staying above the T line in an uptrend. And ENIA, all you can do here is stay long. I'd have a safety stop here because remember our kind of rule of thumb, if they break through a resistance level, they'll come back and test it to see if it's going to act as support. Twitter safety stop would have been right here, because as soon as you get up into the overbought area, you want to have your stop in. Now, if you stayed long, still above the T line. Now, we did Netflix, Shopify. Was one of the ones that was selling off. There, you would have been out of this one on Friday because of the close, bearish engulfing, close below the T line. Your stochastic's heading down. Where do you think it was heading to? Probably the 50-day moving average. Now, if you're thinking about going short, I'd be more apt to short it if it showed that it was going to be or wasn't going to support at the 50. This one, doji sandwich through the 200. You can stay long on this one. You don't want to see it close back below the 200. And CNX, you can stay long on this one. Get rid of this. Let's see, we did JDST. You can be buying the golds. Oops, backwards. UNM, quote, doji sandwich, another TR. You can get ready to buy this one. It looks like it did have to check to make sure that's a bullish, but if you're buying this one, your first target is right here, which is 3 points on an $18 stock. That's decent. And then if it breaks into this area, first target will be the 50-day moving average. And Coop, this one you can get ready to go short if it shows weakness tomorrow. Other than that, I wouldn't be in it, just not moving in any direction. Goldman Sachs, stay long. Need a best friend gap up, then a best friend gap up. Implies there's going to be more upside, and if it's more upside in Goldman, that's usually an indication the whole market is still staying strong. Texas Instruments, all you can do here is stay long right now. Not your most spectacular chart, but it's heading in the right direction. I don't know why Fannie Mae doesn't come up here anymore on these. And AMRS, another one that you could be buying, staying pretty hefty. So you can be buying this one with the expectation if it breaks out through here, you probably got at least that type of move or potentially this type of move. Okay, still lots of good money being made. Investor sentiment is getting bullish, obviously, after coming out of this whipsaw area. I would suspect at least coming up here and testing this level on a 45-degree, which means we could have another 4, 5, 6, 7 trading days in a slow upturning fashion. All right. I know lots of you were they'll win the rest of